You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Hi, everybody. Thanks for having me. I'm Lee Jacobs. Can you guys hear me in the back there? All right, great. I'm Lee Jacobs. I'm a partner at AngelList. I'm excited to be here. As you heard from Naval, AngelList started in earnest in 2010 with the mission of connecting companies with investors online. It started as a basic intro product. Companies like Uber, it's the first round of Uber, Postmates, Thumbtack, many other businesses raised their first set of capital on AngelList. And now we can say that AngelList is the world's largest marketplace for startup investing. So here are some basic numbers. Naval covered a bit of it, but in 2013 is when we really in earnest actually enabled investors to go online and make those transactions through our website. And we've seen a steady growth of investment through then. So about $450 million in about 1,000 startups. We've had $2 billion exits. We think the exits will come in this industry, and typically the better the deals, the longer the exits. But we've had $2 billion exits so far. Cruise Automation, which was sold to GM, and Dollar Shave Club, which was recently sold. So how are we doing so far? If you looked at the cohort of 2013, the companies that raised capital on 2013 on AngelList, we are reporting an unrealized return of 46%. We're pretty excited about that. It's well above the top quartile of vintage funds in that vintage, and we believe that the next set of cohorts are going to be also pretty strong as well. So we believe there is money to be made in the venture industry. The question is how? And I think there's two real things for people to keep in mind. One is that if you look at the chart here, it basically shows the top quartile of venture funds. And the top quartile obviously does very well, but the bottom quartile doesn't. And the key thing here is that if you want to invest in this asset class, you really have to invest in the top set of deals, because those that are investing not in the top set of deals aren't doing well. And what does it take to invest in this top set of deals? One key thing is having a really strong brand and have access to the right entrepreneurs at that early stage. The second thing that's really important to keep in mind here is because of the power law of distribution of the asset class, the famous rule is you'll invest in 10 companies, and maybe one of those will actually accrue all of your returns. So it's really important to really diversify your portfolio. This just shows the more you diversify, the better likelihood of you getting a 3x return on your capital. So the question is, how do you do that? Well, AngelList enables both your ability to get into high-quality deals and as well to diversify. And we do that through a mechanism called the AngelList syndicate. Naval talked a little bit about that, but I'm happy to run you through how that works. So let's use an example here. We have Naval, who started his career as an angel investor, I think in 2006 or so. And he has a great network and has a lot of entrepreneurial people in his world. And let's say he wanted to, this is a true statement, but let's say he wanted to invest $25,000 into Opendoor. Typically, he would do that in the offline world. But instead, Naval brings the opportunity to us and says, not only do I want to invest $25,000 of my own money into Opendoor, I have an allocation of $250,000 into the business. So he brings the opportunity to AngelList. We create an SPV using pure software, and we help him raise that additional $225,000, all in the cloud. And for the privilege, Naval gets to earn a 15% carried interest on that investment, and AngelList earns 5% carry. So we effectively turn Naval from a everyday angel investor with a really great access to a pop-up VC. And what that effectively enables is really deal sourcing at scale. So there are more than 300 syndicate leads all throughout the US and in the world in some extent. And they are out there looking for great opportunities, and all of them bring deals to us, and we create the infrastructure and provide the capital for them to invest. So if you compare that network of what I like to call venture scouts or venture partners in the ecosystem with a traditional seed fund and think about how that scales, we believe we're much more scalable. A traditional seed fund may have a few partners, may every few years, once they raise a new fund and have more management fee to be able to pay their staff, will hire new people and maybe open into a new geography here and there. But effectively what we're doing is building the software layer so people that are on the ground can effectively get into the deals, and all they have to do is bring us the opportunities. So what does that turn into? What that basically means, we estimate about 10,000 companies are in our AngelList network in the Scouts network, and we effectively whittle that down to about 200 companies per year. So what that means is there are a lot of opportunities that we see through the network, but we're very careful about the opportunities that we promote to our investors, because the only way that we're effectively going to make money is to be earning a carried interest on that. So that ends up at the bottom of the funnel about investing in 200 companies per year. So we feel like we've created a platform that is really the only high quality ETF for this asset class, which we think is really exciting. It is not only high quality in terms of the deal flow, but it is also highly scalable and diversified. So how can investors get involved in AngelList? There's three ways that investors today are getting involved. One is through the AngelList managed funds. We have a fund called the Access Fund, which investment advisors and high net worth individuals are making investments of as little as $100,000 into our managed fund. That is going to be a very diversified fund. About 200 of these startup companies get into that fund. The second way for institutional capital, LPs, those LPs that are focused on the tech industry that want to do the diligence quickly, can get deal-by-deal access to our private deal flow. And the third way, if PE funds like CSC, hedge funds, and others want to commit significant capital, they can get effectively a dedicated fund with their own managers and get access to our deal flow. So I'm going to be around for the rest of the evening. I have a colleague here, Alex Pack, who's as well too. So if any of you guys are interested in talking about this and want to ask any questions, I'm happy to be here. So I don't know if there's time for questions. Happy to do it. Or
a couple questions for sure. And then Kendrick's going to come up. Any questions for what's wrong? But what makes me so proud of AngelList is because when I talked to Naval, and we're old investors ourselves, Tom and I said, you know, you're building Vanguard, 2010, I said, you're building Vanguard of this new asset class. And to hear you say that today is cool because, you know, he went through so many with the SEC and trials and tribulation and figuring out how this works, but really it's just the beginning.
Yeah.
And I think when Kendrick's going to come up now, who worked at AngelList and now has gone deeper into the food chain because of Title III, and explain the next phase. But is there a question for
I think I saw one in the
AngelList?
corner there.
Talk about the due diligence process, how you winnow from 10,000 to 200 as the platform.
Yeah.
As the platform representing.
The question is, you know, how do you vet? What's the due diligence? You know, is it social proof? How do you do this?
So we take this very seriously because, as I said, obviously the only way we're going to make money is if our investors make money. So we have this network of 200 angel operator angels, those that most of us have personal relationships with, who have been successful angels in the past. And we look at a few things when we look at the way that I look at it is that the people that are new on the platform are building a relationship with us, and over time we will begin to trust them. But one thing we look for is skin in the game. So the amount of capital that the actual investor is putting into the opportunity, we found that I believe the latest number is about 8% of their own skin in the game is in these actual deals. When you look at the traditional venture industry, it's effectively zero because they may make a capital commitment to the fund, but they're pulling it out in management fees. Most of our vehicles have no management fees. And the other thing that is really important to us is structural signals around the investment. And for the newest of syndicate leads, that's the most important thing. So if an investor brings on an opportunity onto the platform, they'll tell us how interesting it is, but we'll also look at other signals. So if we see that a very reputable firm like First Round Capital is making a significant new investment, investment in the opportunity, we take that as a very high signal. So hopefully that answers your question.
So we're going one more question. Go ahead.
What rights do the investors have to they get preemptive rights in the company?
Preemptive, what do you mean by that?
Or follow-on rights? Or?
Yeah, so we really, we want our investors to ask for pro rata rights. And I'm not sure of the latest stat, but a good percentage of our SPVs do have pro rata rights, which we're excited about because once you have a winner, you want to continue to ride it. And we provide that opportunity to our investors on the platform.
Right, so Lee will hang around tonight for drinks and you can talk about AngelList, and I want to just keep it moving with Kendrick. Yeah. And then Josh and Herb, you guys are in the hopper with CBOE, and we're coming down to the end of the day. So
thanks, Howard.
Kendrick, yeah, thanks, Lee.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.